Welcome to StockTok's deep dive into Monster Beverage Corp. Monster is one of the world's dominant energy drink companies, generating revenue through its flagship Monster Energy brand and a portfolio of alternative beverage lines distributed globally through the Coca-Cola bottling network. At the time of recording, shares are trading at 76.72, sitting inside a 52-week range of 57.01 on the low end and 87.38 on the high end, placing the stock roughly in the middle of that band. The 14-day RSI, a momentum indicator where readings above 70 signal overbought conditions and below 30 signal oversold, sits at 56.3, firmly neutral. The 50-day moving average of 77.66 is just above the current price, while the 200-day moving average of 71.11 is well below it, suggesting the longer-term trend remains constructive. Let's work through the fundamentals, scene by scene. Starting with a quick business overview. Monster Beverage Corp is a consumer defensive name in the non-alcoholic beverages industry. Its core revenue engine is the Monster Energy brand, distributed through an exclusive agreement with the Coca-Cola system, giving it unrivaled global shelf reach without owning a single bottling plant. That asset-light distribution moat is a significant structural advantage. The StockTok score for Monster Beverage Corp at the time of recording is 54 out of 100, a hold signal. The 5 dimensions break down as follows. Valuation scores 0 out of 20, financial health scores 19 out of 20, profitability scores 20 out of 20, growth scores 13 out of 20, and smart money scores 2 out of 20. Now, valuation. The question every investor has to answer: are you paying the right price? The trailing price-to-earnings ratio for Monster Beverage Corp sits at 39.55 times, meaning the market is currently paying nearly $40 for every $1 of trailing earnings. The forward price-to-earnings ratio, based on next 12 months' consensus estimates, comes in at 34.08 times, implying the street expects earnings growth ahead. The PEG ratio, which adjusts the price-to-earnings multiple for expected growth, where a reading above 2 is generally considered elevated, stands at 4.10. That is a number that warrants caution, in our opinion, as it implies the market is pricing in a significant premium relative to the growth profile. The EV to EBITDA ratio, a capital structure-neutral valuation lens, is 28.80 times. Consumer defensive beverage peers have historically traded in the 15 to 25 times range, so Monster Beverage Corp carries a meaningful premium relative to traditional staples comps. The Guru Focus Value, an intrinsic value estimate, stands at 72.98 at the time of recording, against a current price of 76.72. implying a negative 5.1% margin of safety, meaning the stock trades at a modest premium to that estimate. Wall Street analysts at the time of recording have a consensus mean target of 86 across 23 analysts, with a high target of 100 and a low target of 64, a reasonably wide dispersion. The next earnings report is due May 7th of 2026, with the street expecting earnings per share of approximately 0.52, with estimates ranging from 0.49 to 0.57. Market sentiment around Monster Beverage Corp, as of the creation of this video, leans neutral, with insufficient recent news flow to shift that reading in either direction. In our view, the valuation setup is stretched relative to both intrinsic value models and sector comparables, though the brand moat and pricing power command a structural premium. Moving to financial strength, how solid is the foundation? The Piotrowski F-score, a 9-point accounting-based checklist that measures profitability signals, leverage trends, and operating efficiency, comes in at 8 out of 9 for Monster Beverage Corp. That is an exceptionally high reading. A score above 7 is typically considered the hallmark of a financially sound company, and Monster is firmly in that elite tier. The Altman Z-score, a statistical model that estimates the probability of financial distress where scores above 3 are considered safe, registers at 29.38. To put that in perspective, anything above 3 is safe. Monster Beverage Corp is at nearly 10 times that threshold. The cash-to-debt ratio is 13.89, meaning the company holds nearly 14 times as much cash as it carries in debt. Interest coverage, the number of times operating income covers interest expense, a critical solvency metric, is an almost incomprehensible 604.84 times. The current ratio, which measures short-term liquidity by comparing current assets to current liabilities, is 3.70, well above the standard comfort threshold of 2. The debt-to-equity ratio is 0.02, effectively zero leverage. The verdict here is unambiguous. Monster Beverage Corp's balance sheet is among the strongest we have seen in the consumer sector, with virtually no financial risk on any conventional measure. Next up, profitability. Is this business actually making money efficiently? We lead with return on invested capital, which measures how effectively a company converts invested capital into profit, and is arguably the single most important long-run profitability metric. Monster Beverage Corp's return on invested capital is 33.79%. That is a genuinely elite figure. As a reference point, businesses generating sustained return on invested capital above 15% are widely considered to be compounders, businesses that structurally create value over time. Monster is running at more than double that threshold. The gross margin, the percentage of revenue retained after direct production costs, is 55.85%. For a beverage company, that is exceptional, and it reflects the power of the Monster brand to command premium pricing with relatively low incremental cost. The operating margin, which captures the efficiency of the full business before interest and tax, is 29.17%. Net margin, what actually flows through to the bottom line after all expenses, is 22.97%. And the free cash flow margin, which measures cash actually generated relative to revenue, and is, in our view, the most honest profitability signal, stands at 23.40%. This profitability profile earns a perfect 20 out of 20 on our scorecard, and the data suggests Monster Beverage Corp is one of the most efficiently run businesses in the consumer defensive universe. On to growth. Is this business expanding, and at what rate? Over the trailing 3 years, Monster Beverage Corp has delivered revenue growth of 9.5% on an annualized basis. Extending the window to 5 years, that figure rises to 13.9% annually. This is a meaningful data point. The 5-year rate is materially higher than the 3-year rate, which in our reading suggests a degree of growth deceleration has occurred more recently. That is not unusual for a company of Monster's scale. The law of large numbers eventually applies to every compounder, but it is something we would want to monitor as new data becomes available. Book value growth over the trailing 3 years, which measures the expansion of the company's net asset base and is a proxy for retained wealth creation, stands at 7.9% annually. On dividends, Monster Beverage Corp pays no dividend, with a yield of 0. This is entirely consistent with the company's profile as a high return on invested capital reinvestment vehicle. Management is retaining capital rather than returning it, which is rational when internal returns on invested capital are running at 33.79%. The growth dimension earns 13 out of 20 on our scorecard, reflecting solid but moderating expansion. In our view, the deceleration from the 5-year to the 3-year rate is the key variable for long-term investors to track going forward. Now let's talk smart money. What institutional capital is actually doing with this name? At the time of recording, 10 top-tier guru investors, the category of super investors whose 13F filings are tracked by institutional research platforms, hold positions in Monster Beverage Corp. Among the most notable is Lee Ainsley of Maverick Capital, who has allocated 2.22% of his portfolio to the company and has been actively adding, a position increase of over 100%. That kind of conviction sizing from a long-short equity manager of Ainsley's caliber is a signal worth noting, in our view. However, the broader institutional picture is more nuanced. Of all 13F filers, institutional managers required to disclose equity holdings, only 7.7% are net buyers of Monster Beverage Corp at the time of recording. The standard threshold we use to characterize net institutional enthusiasm is 50% or above. 7.7% is well below that level, indicating the majority of institutional filers are either holding steady or reducing exposure. Insider ownership stands at 0.39%, a low figure that suggests management has limited direct skin in the game relative to peers. And in the most recent 3-month window for which data is available, there have been 0 insider purchases and 1 insider sale. A single sale is not inherently alarming, but paired with near-zero insider ownership and weak aggregate institutional buying sentiment, the smart money dimension scores just 2 out of 20 on our scorecard. The data suggests that while a handful of high-conviction names are building positions, the broad institutional tide is not flowing strongly into this name. And finally, the verdict. Let's bring it all together. On valuation, the setup looks stretched to us. A trailing price-to-earnings of nearly 40 times, a PEG of 4.1, and a premium to Guru Focus value all point to a price that already incorporates a great deal of optimism. On financial strength, the picture is near perfect. An Altman Z-score of 29.38 and virtually zero debt make this one of the most defensively positioned balance sheets in the consumer sector. On profitability, Monster Beverage Corp is a genuine compounder. Return on invested capital of 34%, free cash flow margins above 23%, and a perfect profitability score reflect a business that converts revenue to cash with rare efficiency. On growth, the trajectory is positive but moderating. The deceleration from a 5-year rate of nearly 14% to a 3-year rate of 9.5% is a trend line we would want to see stabilize. On smart money, the signal is cautious. Low insider ownership, net institutional selling pressure, and weak aggregate 13F buying conviction are headwinds to near-term momentum. Taken together, the StockTok hold signal at 54 out of 100 reflects a genuinely excellent business trading at a price that, in our view, leaves limited margin of safety for new investors at this entry point. Everything in this video is our interpretation of publicly available data, not financial advice. Please consult a licensed financial advisor before making any investment decisions. That's the deep dive on Monster Beverage Corp. Like and subscribe so we can keep providing you with no-nonsense, data-driven analysis of stocks. We will keep updating our videos as soon as new data that affects the stock becomes available.